Just pleased to welcome you to this panel. I'm really honored to be moderating this panel with these three distinguished professionals based here in Bermuda. We have Andrew MacFarlane from AXA. We have Gino Smith, formerly of RenaissanceRe, and Jeff Manson from RenaissanceRe. Over the next 30 minutes, we're going to explore some of the latest issues facing the reinsurance industry in light of the rising cost of natural disasters, discussing ways to address the protection gap and different gaps in the world, and also highlighting Bermuda's leadership in this crucial sector. So I look forward very much to a thought-provoking discussion. I'm going to start by introducing Andy MacFarlane. He's the head of climate for AXA. He's responsible for global climate strategy, which entails ensuring all the company's climate-related efforts across all areas of the business, insurance and reinsurance, are aligned towards furthering AXA's sustainability ambitions and AXA's climate leadership. Andy, just to kick off our discussion, could you provide an overview of the increasing losses from natural catastrophes that we've been experiencing and the implications this has for insurers and communities all across the globe?
Yeah, thanks, George, and good morning to everybody. Thank you to PwC and the FT for putting on this event and for inviting me to be part of this panel to give my perspective on this very important and fast-moving area. So I think I'm going to split the question into two parts, right? Understanding what's driving those increased costs associated with these natural catastrophes, and then think about the implications and a bit about the role that insurance has to play. So a lot of insurance professionals in the room, so we don't need to dive into the details around how we go about modeling natural catastrophes and physical risks, but the important piece to recognize is when we think about and we try and understand what's driving these increases in the cost associated with these natural events, is recognizing that physical risk is a function of hazard exposure and vulnerability, right? And so when we think about the changes that we have with regards to the changes in the frequency, severity of the extreme events, that drives the exposure side of things and certainly has an important part in understanding how that risk is changing. But a key component that's driving these increases that we're seeing is around exposure growth. So we heard a couple of times the extent to which communities are growing, whether that's driven by population growth, whether it's driven by urbanization, urban sprawl, things like inflation. All of those factors are contributing towards seeing an increase in that exposure growth, and that's actually having a significantly bigger impact that we're seeing on the exposure side of things. So as we look to understand what it is that is driving these increases, why we are seeing more years of greater than $100 billion, it's important that we recognize and we try to understand all the key components that are affecting the risks that we're facing as insurers and reinsurers. It's not just one part, it's not just the hazard, but we need to understand more about the exposure, we need to understand more about the structures we're insuring, why we are seeing this accumulation in these high-risk areas. An example, Florida. The population in Florida between 2000 and 2020, it grew at twice the speed of the US, right? So we're seeing more and more people being drawn to and living in these areas of high exposure. And we sort of pivot and think about the implications. We sort of recognize the role insurance has to play in the face of a changing climate and the importance around insurance in the global economy. We did some work with the Cambridge Center for Risk Studies a couple of years ago, really digging into the role that insurance has to play when it comes to putting communities back on their feet after extreme events. The research looked at over 100 events, 100 losses over broad geographies and timescales, different events, and really went into a lot of detail in terms of understanding what it is that makes a successful recovery, right? What economic variables are impacted, the speed to recovery, the quality of recovery, what happens to communities, and also tried to look at the role that insurance and reinsurance has with regards to that recovery. Excuse me. The findings from that were really around, when we think about the different types of recoveries that we have post-event, the speed and quality result in what you can think of as a impaired recovery, so communities which are perhaps worse off after an event. Restorative recovery, where communities are restored but to the same level, and reformative recoveries, where communities are actually more resilient after an event. And what we found was that when you look at insurance and the role insurance has in these recoveries, if you look at insurance penetration measured as the percentage of GWP in relation to GDP, communities with higher insurance penetration have a better quality and speed of recovery. And we actually found that for every 1% increase we see in insurance penetration, the speed of recovery improves by 12 months, right? So really highlighting that importance and the impact that insurance and reinsurance has in that recovery. Obviously, post-disaster recoveries, there's a lot that contributes towards it. But reinsurance and insurance is a key component to ensuring a reformative and a successful recovery and making communities more resilient post-event.
Thanks, Gino. I know you've spent quite a bit of time in emerging, developing markets, et cetera, so you've sort of had a firsthand look and interaction with some of these communities around the world. Could you elaborate a bit more on what the impact has been in terms of the size of the catastrophes, but also the breadth of them that we're seeing?
Yeah, I can. I guess I'll sort of divide it, right? If you think about like the protection gap, and in emerging economies, it's more related to the fact that the economic conditions don't permit people to actually buy insurance, right? Whereas if you look at, I would say, the protection gap in what I would consider to be developed economies, it's a little bit different. It's more like what you would see in Florida or in California, where you can actually afford to buy the product, but capacity is walking away because you're actually not getting the price that you need. So I guess if I add to that and I think about climate change and just add to Andy's comments, there are a lot of factors that are causing an increase in loss activity. You have inflation, you have urbanization, you have climate change. And then if I isolate out the climate change, just to make it really simple, you have increased temperatures. You have increased temperatures, increased sea surface temperatures. These types of things are causing unusual activity that we actually haven't seen. I just think about my daughter this summer. She was traveling to Spain in Ibiza, and there were wildfires there. There were wildfires there that were caused by climatic change. If I think about recently this hurricane that's occurred in Mexico, Hurricane Otis, what we've seen there is the acceleration of something from a tropical storm to a Cat 5 storm in a matter of hours. So, this is Bermuda, this is a cat-exposed country. Think about the fact that normally you have 2 to 3 days to prepare when a hurricane comes. This is the hurricane warning, 2 to 3 days. All of that serves to mitigate loss, right? The fact that you can board up your house or board up businesses. This was a situation in Mexico where that didn't occur, 24 hours from the point of being a tropical storm to being a Cat 5 storm, which is on the highest end of the scale. So imagine from a pricing perspective trying to get that right. Before you had factors in place that could mitigate loss, reduce loss. Now you can. And then multiply that by the fact that all of the risk carriers, they have their different ways of thinking about how to identify and quantify risk. So it is a complex problem, but rest assured that Bermuda is a place that can solve that problem, right? Like Kevin said earlier, and like Eric said earlier, this is our job, right? And it's clear that capital migrates here and solutions emanate from here. And I can tell you that as a person that has spent 75% of my career working overseas representing Bermuda companies. When I mentioned that I'm from Bermuda, my property cat passport gets stamped.
Sure.
you know.
Thanks for bringing that up. You mentioned multiple companies or carriers having different views of things. Jeff, did you want to touch quickly on just collaboration and the industry thinking about this and sharing information and trying to collaborate in many ways?
Sure. Thanks, George. Appreciate it. And nice to see everybody. I think it's been highlighted already that, there's an opportunity, there's a challenge, and with that challenge is an opportunity. And the industry recognizes that. And the industry's been actively involved for up to a decade now in a lot of large-scale global efforts to really focus on what are existing protection gaps and then what are gaps that are evolving as a direct result of climate change. And so, the Insurance Development Forum was just mentioned in the video previously, and that highlights one of the things that the Insurance Development Forum has been doing. But, that's just one thing. And the industry has been working, tirelessly for close to a decade now on working with the Global South predominantly, and really focusing on closing the knowledge gap. Because the biggest challenge in the Global South is really looking at, understanding the risk. And there's just a basic lack of understanding around the risk. And it's great to talk about closing the protection gap, but until you close the knowledge gap, that can't happen. So there's a lot of work being done on developing open source modeling platforms and developing an ecosystem around that where risk knowledge is shared from the insurance industry. And it's partnered with the UN and supported by the World Bank. And it's really exciting to see the traction that those efforts are achieving with the demand side, the Global South. So the V20 is a group of 57 countries in need. And they've all said, we want that. We want access to that risk knowledge that our industry has. And I think it was really insightful what Kevin had shared earlier about the risk sort of being a continuum. It's not on or off. And risk transfer plays a very important role in the overall risk landscape, but it is not a one-size-fits-all solution. It is not going to solve for everything. But the knowledge that our industry has around the risk is second to none. There's no other industry that has been doing what we do, which is modeling risk, understanding risk, quantifying risk, and matching risk with capital. So we do that, we understand that. And what's interesting is understanding that we can leverage that knowledge for the other parts of the risk distribution where risk transfer isn't going to be an effective solution. The window example, right? Like, we're not going to be the solution. We're not going to be an effective, efficient financial solution for high frequency type of events. But that's where you need to be thinking about land use planning and land use change, and thinking about what areas are no longer sustainable from a habitation perspective. Like, we can't continue to build on coastal areas that are vulnerable to sea level rise and storm surge. That doesn't work. But we can use the knowledge to help inform those decisions as opposed to just leveraging it for a risk transfer product. So that's just one example. But,
and Andy, just quickly, decarbonize our economy and transitioning net zero will be a critical part of helping to manage and mitigate, this changing climate. And insurance and reinsurance has a big role to play in that. Can you comment, just from your perspective, seeing at AXA, how you see that playing out and how, in particular, the Bermuda industry can help with that?
Yeah, absolutely. So, we obviously focused the first piece on that physical risk side of things, right? So really understanding that physical impact. But the transition risk, the extent to which we know the economies are going to transition, we know the size of the investment coming in to support that transition, and we know insurance has a critical role to play as we transition, right? If we think about the size of the investment, we think about the fact that insurance is required at the financing stage, the construction stage, and the operational stage of any of these infrastructure projects. It just gives you a bit of an understanding for the potential impact just on the liability side of things, right? We know we also have opportunities on the asset side, and the previous video sort of suggested that insurance and reinsurance companies are beginning to take positions in terms of demonstrating what support they're doing through their investments as well. So yeah, insurance, reinsurance, that enabler of economic activity, a huge opportunity associated with a significant risk as we transition to net zero. I think an interesting piece for where Bermuda sits is the fact that we have both aspects of that on the island. Right? We have the ability to attract investments, the jurisdiction to support that, and then we have the expertise and skills on the underwriting side to sort of deal with those risks as they need to be covered through the various stages, as I mentioned, whether it's the financing, the construction, or the operational piece. So insurance, reinsurance, critical role to support that transition to net zero. I believe that Bermuda has a strong position that we need to figure out exactly what that looks like and how we can contribute towards it. Sure.
That's great. We're gonna segue. I'm gonna introduce Gino properly. Sorry, we decided to do it in this way. But Gino is formerly the head of property at EMEA and LATAM for RenaissanceRe. Previously spent 20 years at AXXL in various locations and roles, most notably head of property, Inwards Retro, International Re, Chief Underwriting Officer of XL Re Europe, Chief Underwriting Officer of Latin America, Vice President, Senior Underwriter, North American Caribbean. As he mentioned, these roles have given Gino the opportunity to live and work in Argentina, Colombia, Mexico, Brazil, Switzerland, and even his home country of Bermuda. So Gino brings a very different and a very broad perspective to this, which I think we're really fortunate to have. Gino, building on this protection gap issue, can you elaborate on how Bermuda's reinsurance market has helped to increase the coverage for climate vulnerable regions around the globe? And I know when we were prepared, we talked about some of the very specific ways that you think about the protection gap through your experience that may be different than what some of the people in the audience sort of think about immediately top of mind when they hear protection gap.
Okay, well, yeah, I'll just clarify again. I said a bit of this earlier. I mean, that term gets used in situations where the economic conditions and you actually cannot afford insurance, right? So, and the solutions are very different. So, for argument's sake, the speaker before us that was on video, what he was talking about was essentially microinsurance that you would have in somewhere like Nicaragua. So you need to have creative solutions for people that are at the bottom of the pyramid that require insurance products. And those will be, vulnerable people. And I can just give an example of that. I mean, actually a good example because Bermuda was instrumental in that as well. You think about something like the ARC, the African Risk Capital, which is a catastrophe loss pool, which has African nations that are basically trying to share the risk amongst themselves as opposed to each individual country being burdened by a major loss. So this is an initiative that was established in Bermuda in 2012. So in terms of the idea generation, Bermuda was part of that. But then in terms of providing the capacity to make sure that the people are actually protected, Bermuda is instrumental in that. So that's just one example of how we're reducing Bermuda as a territory and a domicile is reducing the protection gap in a vulnerable nation or to vulnerable populations, not vulnerable nations, to vulnerable populations. Then if we revert back to like maybe developed economies, I mean, what that looks like is, they mentioned Hurricane Andrew back in 92. So if you think about Bermuda and the role that it's played in sort of the insurance world, prior to 92, we would have been U.S.-centric captives. That's what we would have been known for. After 92, it became essentially a global center for catastrophe reinsurance, right? So the capital migrates here, and we're providing solutions for a manner of perils globally. And what I would say is that's how we reduce the protection gap through the provision of capacity. But let's be clear, if you're going to provide capacity, you have to have an accurate view of risk, right? You cannot do this in a way that's not profitable, because if it's not profitable, it's not sustainable, right? And that's why Bermuda continues to be a place where talent and capital, this is, I definitely would tell you as a person that lives overseas that this is where the smart money is. This is where the data and analytics are. So, we just need to play our role, right? We need to be ahead of the curve.
Jeff, do you have anything that you wanted to add on that particular topic?
Yeah, I think it's just a lot of great points there by Gino. And, we've been actively engaged as an industry and working on a lot of solutions already. I mentioned from the IDF, but, this year alone, there have been 3 innovative risk transfer solutions that have been deployed for the humanitarian sector. So the Red Cross, UNICEF, and then another group called the START Network. That's never happened before. right? We're talking about donors actually allocating donor funding for premium financing because they're starting to recognize the fact that risk transfer actually has a very important role to play in helping to increase the actual impact that those donor funds will have after an event. And this speaks to what we've been talking about before about speed of payment, magnitude of payment. I mean, rather than sitting there sort of hoping that you get some donor funding after an event as a demand side country, where they're actually now structuring programs where you know what to expect, you know when you can expect it, and the donors are saying, wow, I've just made my money work 50% harder or 70% harder than it would have if it was just a standalone donation. And so it's really encouraging to see the narrative changing around the benefits of risk transfer and the role that it has to play. And so that's an example of where there are situations where there is an inability to actually afford the premium finance. So, but there are other actors that are stepping in to fill that role. And the German government is actually showing incredible leadership in that regard with the Ministry of Economic Cooperation and Development. They stood up 170 million euros last fall at COP27 to create this fund called the Global Shield. And that's now up to 250 million euros at least, and half a dozen global north countries supporting that. The goal is for that to really get to several billion and be a key mechanism in the conversation around loss and damage, where the global south is suffering and they didn't cause the problem. The global north needs to step up and start to be a part of that solution, and this is a mechanism that we can use to do that. So. Just an example.
Yeah, I think this ties in really nicely to our next sort of segment, which very much leverages your background. I mean, given what you've done at RenRe and your client relationships, you're dealing now a lot in the public-private partnerships and a lot of different types of collaborations around the world. Also, you're the chair of ABIR's climate sort of committee or subcommittee, and you've been with RenRe for quite a bit of time, 2006. Can you sort of take us into the next section, which is on building up Bermuda's expertise that we've discussed? Give us more information or color around some of these industry initiatives and where you see this going and how Bermuda can really play a role in delivering some of these solutions.
Sure. I could wear my ABIR hat for a minute and just give a few more data points around Bermuda's role in the overall industry. Arthur made a comment about Bermuda having a 36% share of the premium. We pay on average 30% of global losses. Between 2016 and 2020, the Bermuda insurance industry paid out over $200 billion to North American markets for losses. And from 1997 until present, it's been over $400 billion. So it's a lot of money going directly to paying losses, rebuilding communities, and people's lives. So Bermuda's got this history of really, really punching above its weight for an island of 20 square miles and 65,000 people. So, there's a lot going on there, and I mean that speaks to what a lot of the industry participants are doing on the global scale. So there are these global efforts. There's the Insurance Development Forum. There's another initiative that was recently founded by King Charles 2-3 years ago called the Sustainable Markets Initiative. And that's a very broad mandate. That's global north, global south, private sector, public sector, bringing all of those actors together to focus on sustainability, climate change, nature, biodiversity. That's never been done before, right? The UN hasn't done that. The UN can't do that. But the King is saying, well, look, I've got some convening power. Let's do that, and let's help different sectors of industry work together. So there's an insurance pillar, the Insurance Task Force. There are a lot of Bermuda companies that are supporting that effort. And it's great to see, there's the Insurance Task Force, there's agriculture, there's energy. And it's like, how do all these different pillars of the economy start actually talking about solutions? That convening was never happening before, not at this scale. And so the fact that Bermuda companies are, part of that conversation and part of creating new innovative solutions that are so desperately needed. And the scale of what we're dealing with is so large. We can't expect a company or a small group to do it. You need to assemble critical mass of a large enough sector of all industries to really start to take this seriously. That conversation's happening. That was not happening 5 years ago at all, not at the scale that we're seeing today. And it's really exciting. And one quick one is just climate-wise, which has been around for over 10 years. It's the industry working with Cambridge, focusing on research and focusing on the industry's climate expertise on how can we leverage that to be a bigger part of the solution. So.
Mentioned before was data sharing, going more open source. Can you drill down on that a bit more and give us some more examples on how Bermuda's played a part in that, the development, but then also where you see it going?
Absolutely. The whole risk knowledge concept is so important, right? If you don't know what you have, how do you know how to deal with it? So you start by understanding the basics. And there's a really big financial barrier to entry to understanding that. In order to model your risk, you need to pay a license for a vendor model platform. And that's cost prohibitive for a lot of actors in the global south. So what Bermuda has been doing, Bermuda companies in particular, as part of a larger global effort, have been funding the development of an open source risk modeling platform, which democratizes the access to risk for all actors in all segments. It also enables academia to be able to develop by peril, by region models that then get deployed on this platform. And so it's exciting to see how that has been continuing to evolve with leadership being shown from Bermuda, and really important to democratizing access to risk knowledge and insights. So.
And I don't know if you had anything you wanted to share on this particular topic.
Yeah, I mean, I think it's coming back. It's a few things we can tie together. There's the importance of the risk-based pricing, which we've heard a lot, right? Having access to that information, making sure that the appropriate premium is charged to make sure that the market that we have is sustainable and viable. Having access to the information in those components, hazard, exposure, vulnerability, as Jeff outlined, through those various platforms gives you that ability to have that insight. But it's also about understanding not only where we are now in terms of those views around climate and where exposure and vulnerability is, but what the future looks like. And that's where some of the academic partnerships that companies have, whether it's BIOS, whether it's other academic partnerships across the globe, in terms of digging in and understanding what does the future climate look like? What do hurricanes look like in a future climate? What does population density, population distribution look like in a future climate? And how do we think building codes have evolved, and how might they evolve in the future to make communities more resilient? So I think having access to that information, spending the time to make sure you dig into each of those components to understand them in more detail, I think is a critical part of ensuring a sustainable and ongoing viable insurance market.
Gino, I want to open it up if you had anything you wanted to add.
Well, I won't really add too much to that. I mean, I certainly think that the industry needs to agree to what the problem is, right? So that they can have, so that each of the companies working within the industry can have the correct view of risk, so that it can be profitable and sustainable. And the other thing that I just wanted to highlight, which is something that Jeff said that I was reflecting on, is that Bermuda is actually in a very, very unique position, right? Because, and it has a reputation as being entrepreneurial outside of Bermuda, because you have the senior leadership. Like, for argument's sake, if you think about ABIR here versus the Swiss Market Association in Zurich, I mean, here you have the leaders of the companies that are based in Zurich, right? So if you have, you have the leaders of the companies, so that actually drives global thought processes. I mean, this is truly a marketplace, and it's truly a think tank, and it's truly a place where solutions come from. And Bermuda's unique in that it provides a forum for that. And I just can, certainly for CAT, I can highlight that more. It really is.
Perfect. Gino, you touched on ARC before, but Jeff, if you wouldn't mind, if you could go into a bit more detail about ARC and sort of the the archetype, I know it sounds like a bit, the archetype of an institution or structure that is, and
Yeah.
some of the work that we're doing to try to
It's
make
a
that
very,
accessible.
very innovative solution, right? And there are now 4 of these regional cat pools around the world. So there's one in the Caribbean, there's one in Africa, there's one in the South Pacific, and there's one in Asia. And so ARC has been around for over 10 years. But it's complicated. These things are inherently complicated, and people don't really understand how complicated. Like the complications just around the legal and accounting conditions and governance are such that you kind of can't actually make them legally recognized entities. I know it sounds a little kind of odd, but it's actually a thing. And so when trying to structure these multi-regional solutions, there are very few jurisdictions in the world that have the creativity and the adaptiveness to be able to say, we understand what you're trying to do, we can help you solve that. And that's what happened. And so, 10, 12 years ago, when ARC were trying to figure out how do they structure this vehicle where they can actually participate in risk transfer programs for Africa, they went around like we don't know where to do this. And it turns out Bermuda was the place to do it. And so, ARC Limited was established in Bermuda, and it's great to see that was a great example of Bermuda's entrepreneurism, to your point. And Bermuda has got the 400-year legacy of entrepreneurism, and a lot of people don't recognize that, but Bermuda has been forced to be entrepreneurial because it doesn't have many resources. So what it does have is people and ingenuity and creativity, and it's always been a center of trade for the Atlantic for hundreds of years. And so to see, it's just constantly building on that. 1992, Hurricane Andrew, right? That was a massive event. People forget it because it was 30 years ago, but RenaissanceRe was a post-Andrew startup. And there were a lot of other post-Andrew startups. And at the time, the insurance industry in the US thought that the largest event that could ever happen in Florida was $10 billion. Well, Andrew was $25 billion and blew people's minds away. And traditional, insurers and reinsurers said, many of them said, this is an uninsurable risk and walked away. There were others that actually said, hold on, we can do this, we can leverage technology, we can leverage risk modeling that was never really leveraged before, and we can set up insurance companies in Bermuda and start to provide capacity. And that's what happened. So that was tech dislocation, tech innovation 30 years ago, leveraging risk modeling that was never happening before. So we've got a long history of that, and it's exciting to see, what we're seeing now, where we are seeing sort of markets pull back from certain areas, regions, perils. That is a more of a regulatory thing than just a pure kind of we don't understand it. We understand it, we've got it, but you have to there are shareholders, and what shareholder wants to continually just lose money year after year after year? There needs to be a reasonable return expectation in order to be able to maintain the delivery of a product. And so going back to the risk-based pricing, critically important, right? Because that signal informs the underlying insured what the risk actually is. And if that signal is masked or suppressed by regulatory activity, then they don't know what they're really dealing with. The National Flood Insurance Program in the US is a classic example of that. For 30 years, they've been subsidizing the rate to be able to make access to insurance affordable, which is noble and commendable, right? The problem is it's been mutated into providing low-cost insurance for people's second and third beach homes on the beach. Let's not do that, right? So there are places where it's important, but there are other areas where it's not important, and that's why it's important to, for people to really understand what their actual exposure is, right? And then from there, you start to think about, how do you start to evolve from where we are to where we're going to go, right? And that's going to take a while, and it's going to cost a lot of money, and it's not going to happen overnight. And so how do we work through that process? So
as we wrap up, I want to first thank Gino, Andy, and Jeff for being so open and sharing with us their knowledge and experience. Gino challenged me or challenged us with what was the key takeaway. So we do this panel, we were up here for 45 minutes, what is the key takeaway? So now I'm going to put on my Bermuda Business Development Agency hat. The key takeaway is that Bermuda plays an outsized role and has for years in both as an intellectual powerhouse and the center for capital to address global climate risk. Bermuda's robust business ecosystem features specialized talent pool that prices climate risk related every single day, leverages sophisticated analytical capabilities, has broad and deep bench of professional services firms like PwC, that's the sponsor of this, and it has a globally respected regulator. Bermuda stands ready to partner with entities around the world seeking to build resilience and to close protection gaps anywhere in the face of climate change. For any organization looking to deploy capital to address climate threats, we encourage you to leverage Bermuda's unparalleled ecosystem of climate underwriting expertise, modeling prowess, and well-reserved reinsurance capacity. We'll open it up to questions, but again, it's important, the takeaway is Bermuda is the place where climate risk solutions can actually take shape, be insured, and then be deployed around the globe. So we want to thank PwC, and Annabelle, if there are any questions, we're happy to take them.
We do have one. What are the major challenges for Bermuda insurance companies penetrating the developing worlds with innovative solutions that benefits the buyer and the seller?
I think that's Gino's wheelhouse.
I guess if you were talking about like an emerging economy, then the major challenge, I mean, it would be more on the primary side than the reinsurance side, but the major challenge would be trying to find a way to provide affordable products, right? And in addition to that, insurance is different from banking. Like if you think about banking, you get a loan and the onus is on you to sort of pay the loan back. Whereas with insurance, it's sort of reversed. People pay premiums, and they're not always sure that insurers are going to pay the losses, right? So it's reversed. But the main thing is figuring out a way in these parts of the world to provide an affordable insurance product. And the bottom of the pyramid, I mean, you have people that are living in huts, right? Farmers that are living in huts, as an example. So to provide them with the type of insurance that they need to insure their agricultural crops or whatever it is that you're actually insuring, it needs to be affordable. And there's actually been a lot of impact investing companies that have been really, really successful at that, right? And you have to be creative, you have to be smart just to make it affordable. Hopefully that answers your question.
I would just add all excellent points, but it's the view of risk, right? A lot of these developing economies, there is no view of risk because views of risk have been developed for mature markets over hundreds of years, right? Where there is profit to be made. So, for an individual company to go into, your company ABC or whatever, or country ABC, that's like, there is no insurance market, there's no financial incentive to develop a view of risk. And so that's what the Insurance Development Forum is doing. It's actually bringing the combined risk knowledge of the industry and pooling those resources to develop a view of risk that is then not proprietary for an individual company, but it's to be used by the country and by the industry to then start to develop products that can be more efficient. When there are, dozens of individual views of risk, that's when the pricing of the product becomes much more expensive. When there's no consistent sort of, okay, this is a view that makes sense collectively as an industry, then all of a sudden you can start to talk about scale and you can start to talk about bringing capacity to the market, which makes it more efficient. So it's a bit of both, right? So.
That's it.
Okay. Well, thanks again, three of you. It was great. Good time.
Thank you, George.
Appreciate it. And thanks very much,
Appreciate
everyone.
it.